just 1 second. All right, yeah, so the first thing we're kind of gonna do, we're gonna pull up our charts, we're gonna get the bigger picture, yes, but then we're also going to look at, zoom in a bit, see what the market is currently doing in terms of higher highs and higher lows, to get a picture of what direction we should be trading in most recently. And then we know, all right, is the market sticking to that pattern? Is the market gonna break that pattern? So that gives me a better idea of where to place fibs, rather than just placing fibs arbitrarily, just placing random fibs. All right. One of the other things that we did yesterday, we pointed out that support and resistance areas become good places for targets because of how the market is moving with the choppiness or with the sideways movement. So we could adjust our targets a bit based on the time frame that we're entering on, and maybe look for some closer targets on the way to those longer term targets. Wait for proper setups and look for breaks of those areas. So even with the USJPY that we said could potentially fall and then go up, or come down and go up, right? But again, with us talking about this making higher highs and higher lows, yes, this area here is going to push the market down, but even if we're talking about push the market down, there's a third possibility if it is going to fall. So from here, this market can go up first to form the first down, A, B, C, and then D. So either way you take it, if we get a bullish formation here, I think we have a fairly safe trade that we could take, because what did the market do? If we look left, it's simple, just look left. Why would the market stop here? Let's stop here because this area here was an area of resistance, support, now being support again. So once we establish, all right, right now we are making higher highs and higher lows, we could look at a target, and then if we go down, you see what right now the high is quite up here. Let's say it does not do this and is gonna fall. We want to be in a trade that at least we know, all right, we're gonna take some profit, what it does after that, because the reality of it is this: us buying or continuing to buy all the way up here, the market needs to break this area. Agreed? Yeah, so if we take some pips on the way up to that area, we'll be fine, right? If it continues to go, we'll miss out, but we'll be fine. But when it finally does break this area, if that is what it's gonna do, we look for an entry again on top of that what was resistance area, now to become support on top here, to the D extension target. So to do that, this is when now we start going into entries a bit more. So we'll be talking about going down maybe to the 4 hour, right? So the 4 hour, let's look at this.
That's a question I actually have. Is there EMA or what? How many? You just leave 200 EMA for 4 hours.
I leave the 200 EMA on all the charts. What I'm more looking for, so like I'm looking for convergence. So yes, it's been nice, like if the 4 hour was here, right, on top the EMA, because it'll match up. But because of where the daily is, if the daily is already above and we start getting U-turn signals on the 4 hour, I'm good with that. And what I mean by that, again, counter trend line breaks, but look at this. I want the market to take out highs. So this is where you're gonna start looking at. Right here is a group of highs. Right here is also the 200 EMA. So if we could get a candle to close above here, most probably it is gonna close above the 200 EMA. We might get a little pullback to test. That's a good area for us to start buying, because at that point, if we draw a downtrend line, yeah. So if we draw this as a counter trend line, put it red. See? So above here we are gonna break the trend line, but we are gonna take out these highs, get a nice little pullback maybe, and then we could go bullish. And with all, if all of this is right here, so if we have resistance from these highs, if we have resistance from the trend line, if we have resistance from the 200 EMA, all in the same area, then a break above that tells us that, hey, this market wants to go bullish. So then we could place a stop. We could start, like this is what we could do. We'd start with a stop maybe below this area here, and then as the market start to move, you could move your stop to break even, or you could even move your stop right below the support area here, depending on what strategy you want to use. But so this is a good way for us to treat with the US dollar JPY.
That's something that I'm always process on, but I have a challenge,
Yeah. So that's what we'll be looking at. So we'll work on entries today. So entries is when we start to go down to the smaller time frame. So for me, for the type of trading that you're talking about doing, right? Or I mean, for you, especially with your time and everything, to me is it more swing trading. You're not gonna just be in front of the computer scalping. Right, so this is the type of entries, like you identify direction, you identify what the market is doing. I wait for daily confirmation, and then I go down to the 4 hour to get a better entry. That's it. All right, and again, look at this here. If on the way to where we want to go, and that's what I'm saying, we don't need for the market to come all the way up here. Look at this. This is the next batch of highs. And again, formed by these sideways movement where the market was trying to go up. So if the market breaks here, then that means we have open range for, if we get an entry about there, this is 75 pips. If we were going after 150 pips, right? So twice the amount. But look at this. What about taking 2 entries at this point? Go after 75 pips by 2, we make the same 150 pips. With the whole move, we don't need to be in it anymore. What about taking 3 entries at this point? Because you see, once you get that confirmation and you start to get a bit more comfortable, that's what it is. Do I need, if this is a 75 pip move, right? Look at this. Chances are this market is gonna move 20 pips, right? Let's just say, right? So we might, once we get that proper entry, even if it's gonna leave a wick, like, so for instance, let's just say for some reason we were selling here, right? And you were talking about going all the way down here. The market gave us a push off it because again, it's an area of resistance. So if it holds, which it did, you would at least get a push off it, right? So what about now finding these zones, finding these areas, and instead of going after 75 pips, go after 20 pips by 5 trades. Same pair, same setup, 10 pips by 5 trades. So that you make, what you do, you're going to make 50 pips because it's going to be way easier for you to capture 10 pips, 20 pips at a time, right? And do it with volume rather than trying to go after 100 pips at a time. So that's how you scale a position as well. Once you start to get comfortable and you could find these entries, yes, you wanna watch the market, so that will build your confidence. So you will note that, all right, the market is gonna go up here. But if you capture 40 pips, 50 pips out of this, and you did 3 positions, that's 150, and you could be good. Because what you're watching is, all right, that would have been 150, is supposed to be the whole move up here. But if right down here you capture 150, you're good. And then the reality of it is this: if it comes up to this area here and does the exact same thing, so we're talking about a move like this. Let me put this in black. We're talking about right now, if from here this goes up like this, probably gives us a little pullback, we can look to buy up to this area here. right? But then if it breaks this support area, it's probably gonna do the exact same thing. And that is what we did. Let me show you gold, right? In one of the programs that I'm doing, we looked at gold like that last couple days before it had the big bullish push right down here. See this sideways movement here? I had a box like this and this. Roughly about that. Alright? And I actually have a video of it where we were talking about the market holding and bouncing. So if this market comes down to this area here, gives us this bullish formation because that's support, we bought the market up to here. Alright? From here the market fell. Within here we could have done the exact same thing. If you watch, just watch for the breakout, right? We then have a smaller box right here. See it?
Yeah.
This is the breakout. This is exactly what I'm talking about, and this is exactly what we did. We bought the bottom here as support, we bought the bottom here as support, and then the market came up, broke out of this support. Again, where's my first target? A good place for our first target is right up here. Let me change the color so you can see it. Yeah. And on gold, I don't know, do you look at gold?
I don't. I can't trade it.
Oh yes, that's true. So gold,
I mean, I'll glance at it to try to, keep it
right.
around.
This is like 1200 pips. Because gold, what the MTI tool measures it at, because that's a standard tool. So you see it says 121 pips. Gold is in points really, so this is actually 1200 points. So, and gold trades, if you put in 0.1, right, gold pays 0.1. So it doesn't pay like 1 is normally 10, 0.1 is $1. Gold pays 10 cents. So if you put in 1 as in a standard lot, it pays by $1. But the thing is $1, and if you watch gold in, check these candles here, what looks like a small candle, right? So let's just say this candle right here, this is 700 pips in a 4 hour period. Huh? Yeah, it's good to trade if you watch just this move here. So if you just waited for the test, right, and then you took just the 1 4 hour period, this is 700 pips again right here. The next candle moved over 1000 pips. The next candle moved 1500 pips. And we were looking at this in class, so we bought again. When it comes back up here, if it held, so if it did like this and held that resistance, then we'd be fine. But it never gave us an entry. See, the market broke. So again, even if it broke, pull back to test and go again. Again, paused here, pause. Right, you could have set up a box again here, and then it broke and it's going up. And gold moves the opposite. You're aware of the relationship with gold and the dollar, right? Right, so it moves opposite to the dollar. So if that's the case, then the dollar should be falling based on what we looked at yesterday. So remember yesterday we said this is a possibility. Let me go back to the daily. Alright. We said this is a possibility if it wants to, but we also are making higher highs and higher lows. So is it that after push up, because we know the market doesn't just go in a straight line, so is it that now the market is gonna go up? And when it goes up, gold is gonna fall? Yeah, that is a possibility. So we just need to watch and see what the market is doing, and then we could take it from there. I want to give you control. What pair you want to do? What pair you want to look at? You have your charts up?
I do.
Alright, so I'm... Sorry? I'm not hearing you. Right? What are you saying?
So I had to move this. I have the same monitor on my chart, so it's covered right now.
Okay. Let me give you... I'm gonna give you... So I made you the host, Thomas. Right, so I made you the host. So you're supposed to see a little panel there, and you're supposed to see new share. So you could go ahead and share your screen. Let me see you do a couple pairs, and we'll get it practice like that. Alright, good. Just give me a minute. Let me move this over. Alright, so I have your charts up. Alright. Alright, so let me see you. Alright, so if that's where analysis is, tell me how you got today and what we're looking at.
Alright, on this one, it's pretty much not the set. See this one here is making higher highs, higher lows, higher highs.
Alright.
Expecting it to go up.
Right?
I broke some highs. Right here, broke this kind of trend line, just a little bit sideways.
Right?
So I have this obviously bouncing off the trend line.
Right?
Outside, just moving with the slogan. So I'm waiting for this to break and go up. Now, 4 hours. I didn't clean this up. Some of this was wrong. I was messing with it. I just do this more. Gotcha. Alright. No, nothing else to do. I'm gonna have to bounce it up. That's right. I guess go on 4 hour. Same thing, moving up into higher highs, higher lows.
Right?
Although, this is knocking down the portfolio prices zone.
Right?
The daily, isn't going to push it up, so that's pretty shallow trade.
Right? Because what will, all right, from the daily, go back to the daily.
Absolutely.
All right, what is stopping the market from the daily from going down deeper on the 4 hour?
On the 4 hour?
Yeah. Because just now with the 4 hour, you said the market could possibly go down deeper, right? But what is currently stopping it? Right, that's one. What's the next thing? Right. Yeah, just refresh it, I guess. Click refresh and it, the go to the next to the website at the top. On the next side. On the next side. By the actual, by where https smarttrader.com. Right, and then click the right next to the, yeah, right there. Yep. Okay, it's still happening. Okay. Alright, but go to the daily. Go back to the daily. This is the point I wanted you to get. Because that's what I'm saying. That's the type of thing that you link so you know where you're at. That downtrend line there from the daily is what's really preventing it from going back up. From falling any further.
Right.
So that red downtrend line that you have there, because that's why it came down. You see, it came to the back of that trend line,
right,
and that held, right? Yeah. Again, but for now, remember that's what we did yesterday. So if it's a crown and we expect it to come all the way down, we could point out the area. But one, it has to close below where it currently is. Right. Two, that low that formed from yesterday, they'll have to take out that low, right?
Right.
So then, if we look into buy, an area that we would be wrong at for now would be below that low, right?
Right.
So that's already our stop. You get it? Because a lot of traders, they make the mistake of like trying to say upfront, alright, I want to place a stop at 50 pips. Or I want to place a stop at 30 pips. But the reality of it is, where the market is, the market conditions will tell us where we need to place our stop. And then what we have to do is, if you want to take this trade still, then you'll adjust your lot size to suit.
Right, okay.
So if the stop on this ends up being 300 pips, 400 pips, sorry, 400 pips, then what we'll do is we might have to trade by 10 cents if you only want to risk $40.
Right.
So to me, that is right now, that is what right here is the main thing stopping this from going down. So when I go to the 4 hour, I can understand why we'd have a super shallow retracement. Right? Go back to the 4 hour. Right? If you zoom, right, so open, right? So if this here would be the back, and it might actually be a trend line running similar to this one that you have here, right? So let's say that's it, right? And that's where we're at. If we watched here, when you're doing these crosses, right? So if the daily is expected to go up and we have the 4 hour here, you turn in this bullish formation right here that occurred at this point. So right here, along with this U-turn down here on both RSIs, is a good trade. Because it'd be one at the back of a trend line. Two, you have a bullish formation, so you have confirmation. Three, the daily stochastic is in the buy zone. Four, the 4 hour stochastic is in the buy zone heading out.
So you could take this basically to around this high. Right?
Yes.
Take it right to this area here.
Because that you're now also talking about a resistance zone, right? Where, because remember, what you also have to bring down or should bring down is, remember, you identified the sideways movement on the daily.
Right. Well, that's what I said. That's what I have it off.
Exactly.
I may have deleted it for some reason.
Yeah, no problem. So you have a box like that. So then, yeah, we could buy all the way to the top. We could buy to the high and relax, and then see what the market does. If we finally get our breakout, because that's the thing with breakouts. Just like yesterday where I was showing you with the trend line break. If I just have a trend line break, I need also the market to take out a high. So I'll kind of miss that first part of the move. But when we get a pullback and it comes back, then I would look to buy for the market to go, because that is a more confirmed move. Same thing with breakout. You see the gap down? The gap down did break out of the consolidation. But look at what, if that was gonna hold, the market will hold at what was resistance or what was support. Is supposed to come support or resistance.
Right.
So at the back of that trend, at the bottom there where was support, at the bottom of consolidation, if the market was gonna hold for that breakout, we should have seen the market give us a bearish formation. It should have been able to close. If you draw a little mini counter trend line right there, it should have been able to close bearish, break, right there, break that counter trend line. That would have been your entry to sell. You'd have put a stop right above, right above, yeah, like that, and you'd have put a stop right above that area there at that point, and you would have been able to sell, because the breakout held. But in this case, the breakout didn't hold. The market is right back in the consolidation, which probably means it's gonna go all the way back up to the high, but you have a closer target. So again, how much pips, if you took the entry, how much pips are we up right now? The bullish, so if you from the bullish, yeah.
Let's see, what I heard where it probably just above the highs. It's approximately 60.
Right, and measure the whole consolidation. $200, right? So we could go after 200 pips. We could go after measure from what would have been the entry to the red line, to the first area of resistance. That's 143. So 50, 60 pips by 3 positions is 150 in 4 hours, and would have been over it.
Instead of doing one lot, going to
Yeah.
140,
Yes. Because on the way you're gonna meet little areas, because if you go now and you look, we could find some resistance right where we're at from that area right there. Exactly. See, and it's 4:30, so I guess we have an announcement. I guess today had an announcement for the pound. So you see we have the market pushing up.
Yeah, I have the Forex Factory open better again. Oh yeah, 4:30. The average earnings for a pound and unemployment rate.
It was good. It was positive.
I want to refresh and see what numbers are. Average earnings, it's not showing that. Forecast 2.6, previous 2.6. Show me numbers. It's not showing me the actual numbers yet.
Yeah, that's alright. But you see what we did, right? So we came to a conclusion. We said, alright, the market should be bullish, right, based on what it is doing. But it's in a sideways move, it's in a channel. So then if that's the case, you do 2 things. You could buy support and sell resistance. You could do both, or you could be biased. So you're not interested in selling resistance because you believe it's going to go bullish, right? So you believe it is going to break out, right? So then all you'll be doing is buying support until it breaks out, looking for setups like that, until it breaks out, and then you basically take profit.
See, it's interesting though, like sometimes I see things I'm like, alright, well, never fulfill this. I mean, it's always in the back of my mind, it could still come down.
Right. But it could still come down, but again, that's where now you're taking the bigger picture into account. So from the daily to come down, it has to break, it has to close below that trend line that's holding it from coming down.
Right.
And look at where the RSI would tell you the market, because of the, instead of falling, this market went sideways and used up. When the market is going sideways, the RSI continues to move as well. All right, so sometimes the RSI goes sideways with it as well, but depending on what the market is doing, instead of the market coming all the way down for the RSI, the market will hold, right? And the market, sorry, will go sideways, and then moving sideways, you'll see the RSI going down, 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 which means, all right, the bulls are more in control. So it's supposed to be a bear movement, but instead of getting a bear movement, you get sideways. Or it's supposed to be a bull movement, and instead of getting a bull movement, you get sideways.
See, that's one of my issues right there. Is just looking more. I really have to focus more on what's happening right now. And I think it's one of the things I was missing. Because, you know, looking here on the daily, I can see it broke this.
Right.
Breaks one, it's going to go to the next. You know what I mean? So it's a nail.
Right.
You're down at some point.
And that's the thing. So I'm not saying no, but what we're talking about is, all right. So two things. If that's the case, so from the high there, identify your highs and your lows, and not there, go right from the start of that downtrend line, right? Right. Identify your highs and your lows for me. What you counting as major highs and lows?
Oh, high. That's a low. That would be a high. That would be a low. See, now this one broke this.
Exactly.
Pushing back up.
So if it was gonna fall, one, it should not have gotten above that counter trend line.
Right.
Two, it should not have taken out that high. Right? So because the market now is no longer making lower lows and lower highs. Yeah, and especially with that. So if we have now a bigger fib in play, yes, we broke that trend line, but we mightn't go to that trend line. That's one. But two, if we are going to go to that trend line, the market needs to break some lows, right?
Right.
If we are going to go to that next trend line, the market is going to break some lows. We might have a counter trend line from that point where you're at right now. So that's what will have to happen, and that's what the market will have to tell us or show us for us to then trade that.
Right, but at the same time, it's also, it is.
Yeah.
Going up in UCD.
Yeah.
That makes sense.
So then the buyer should be bullish. It makes sense why it would crown. Right? It makes sense why we'll be breaking those trend lines. So yeah, the break of that original trend line was just to come back for a deeper retracement to find some support deeper, which it did, and now it could possibly be going up one time.
Right. See, that's what I'm saying. It's a couple simple things that they weren't making sense for whatever reason, and now they are. I mean, based on a lot of what we went over yesterday, they were breaking these highs. So now my bias should be bullish.
Yeah, correct. Yeah. Until so that same low right here, right? That we identified in the market, until the market takes out this low right here, right? And then even some of these lows right down there, because for now the first low to take out is going to be this low and close below this trend line. If it does that, we could start looking for a selling opportunity again to where if this crown is going to hold, then the first area there is going to be, is going to be around that area, around the left tip. So if I had to sell, if we get something like that and we have to sell, then we're talking about selling to that area.
Right, at least
yeah.
Could go to that one.
exactly. Because then I don't want, like, you could start thinking, all right, yeah, we're in a downtrend now, so it's time to start selling. But the market could literally just come down, right, to find equilibrium to basically match that, and then start going bullish.
Which it should at some point, but right now it's still.
Yeah, right now it's based on what it is doing.
Right. Yeah, it seems like that's the part I was missing.
Right, so is the right now you have to be concerned about. So yes, like, because a lot of traders, the easiest thing for a trader to do is find direction once you get accustomed to it. So you have direction in the sense that you could say, all right, this is a crown, you identify the crown, this can potentially fall all the way down there. The second question is always be the problem, is it gonna fall there now?
Right. That's exactly some of what I was missing.
Yeah. All right, let's look at another pair. You pull up another one.
Let's see. Let's try this one. What was that?
So let me see, go to the weekly if we're doing, because you have it up, all right, or go, all right, start on the monthly one time. So go to the monthly and let me see what you are seeing.
Alright, monthly. Why are my trend lines going? I don't want to keep track of it. Okay, on the monthly, well, obviously, we bounced at the bottom here.
Right,
Broke the trend line, so I had my up bids here.
right,
Where we at? Coming in closer. This came down, bounced off of this inner trend line here.
right,
Broke the counter trend line going up.
right.
Above the pivot point.
So again, on the monthly, we're going up. The RSI, however, is pointing down, right?
Right. So we could have a shooting star here.
Right. Good. Zoom out a little bit.
Right.
Some more. No, out. Right. So now you see, like how you're talking about big crowns.
Right.
You're seeing that this could potentially be a bear crown, right?
Right.
And where the extension is that you have labeled there, right?
Right.
Aligns with the crown, right?
Right.
So that's what you call a convergence area. So the monthly, the RSI is not gonna turn for a little push, right? So it might make sense that we're bullish right now up to that area, and then we'll get a bearish formation and the RSI would continue on its way down.
Which is what I was looking at. I mean, it's, within the 1.18127 area, which is typically,
right.
A lot can be a resistance or support. So.
Right, and this applies to any time frame. All right.
Yeah.
So.
And keep my eye on that. So.
All right, good. So go down to the weekly now. So so your bias from the monthly is what?
Bullish right now.
All right, good. Go ahead.
Okay. Weekly, very similar setup. It's broken the counter trend line. We're heading up, and we've gotten very close to 118 area. We did have a force candle circulation that pushed off how we are inside the top.
Right.
We got somewhat of a bearish shooting, so
Right.
that's it right now.
So right. So the weekly now is telling us that the pound Aussie could potentially fall. So yes, we might have a bullish bias, right? But taking into consideration that the monthly RSI is facing down, The weekly is now maxed out and is looking like it's going to be U-turning to leave the zone, right? It makes sense that we could have a pullback, at least, right? We're not talking about, because we can't be talking about change of direction, because at the end of the day we are making higher highs and higher lows, but we could have a pullback. Why? The B high, so I want you to do this. The lines that you have there, right? Just move the line at 1.8333 to the B high, right? Which is kind of where the market is holding at. And then move the line at 180.077 down to the low of that bearish candle right there, the blue bear. Yeah, that is this, because the same thing we did, right? We did it on the daily, where we were saying if we had to take a trade, that's where the market might have gone to, right? If this market hold, that is potentially the opportunity we have where we could get a bearish move, maybe at least back down to there. Because if you go again, why did the market stop there when it was falling? The market doesn't just stop or push randomly, right? It will push in what you call free space until it reaches a resistance area or a support area. And if you watch where you put that line now, you could see a lot of resistance to the left. Alright? So that's kind of your areas. So now, what's your bias for the weekly? Or what you need to see for the weekly?
Well, I mean, see, I think this is where I get a little mixed up. But I'd be expecting this to test. I'm waiting to see if it breaks above.
Right.
If it comes back down.
Right. So now I want you to make sure those two lines linked. The 85. So change them to red or something before you link it, before, because it might have had blue lines on the daily already. So just change the color. Yeah, just to point it out, and then do the next one. I guess we could find out one because it's be at a high area there anyway. Right. Right, so now go down to the daily and let's see what the daily is doing. It's fine, we know it's that top line there because it matches. It's actually there if you zoom in. It's under the blue line actually. Yeah, see it there as well. Right. Right, so now I want you to bring, you see the daily in terms of the line at the bottom. The daily has a low before that, correct? A little higher up, not that one, go down again, down, right there. So the bottom red line, bring it up to there, because you're looking to find, again, as I say, you want the free space. You see how when the market was going up, it took like 2 or 3 candles, so that's 2 or 3 days, and it covered all that ground. You want to get into trading these spaces like that. So if you measure that, measure those 3 candles of bullish movement that we had from before. Yep, from the high, from the lows here. Right, that's 580 pips in 3 days. But if you were fighting up to buy from before, you realize what it did. The sideways movement is what will get you, right? Again, I wanted to point out this. You see that blue line that you have there at 1.8333?
Right.
Right?
Okay.
Right. Go to the left. You see any resistance right there? And then what did the market do? Which is the same exact pattern, right? When it broke out, it gave us a push to the potential next area, right?
Right.
That's the type of trades that you want to get in there. No, leave that line. Why you move it? Yeah. Yeah. right? So that's the type of trades that I want to get involved, and the strategy that we'll do. That I was actually talking to you that you purchased as well, right? The strategy, that's exactly what it is. We're gonna be doing that. We're gonna be looking for those areas. So yes, we have a bias in terms of direction, but it's gonna be confirmed. That's why the win rate with it is so high, because you're just waiting. You're not just gonna be talking about, all right, yeah, this is making higher highs and higher lows, let me buy. If you don't to buy, you need the market to be breaking those areas. And that's what exactly you'll be doing. You'll be talking about 2 or 3 trades at a time, right? Once we get a break, because if you watch that break of 1.83 to the 1, the market went up. Check and see how much pips that is from that blue line to the red line. 193 pips. So by, if that was the next area and you're talking about 2 to 3 positions, that's 600 pips.
Right. You know,
All right. So based on where we're at right now, if that is the potential zone, then this market can't, because everything, all the RSIs is bearish right now.
I was gonna say, I'm looking at the chart to see where they're actually. Yeah, I can see how there was a crown point on the floor.
Exactly, on the forward that we might get a little push up again, and then if the market holds here, then we could think. So in other words, we need to identify 2 areas now. So just to change color with the line so you can see as we keep coming down how it goes. Not there. I want you to draw a line. Well, that's where the crown could be, right? So we'll identify the crown with the actual crown. Right above the high, so select the line tool and place a dotted black line. Let's just, yeah. Not trend line, the horizontal line.
Oh, okay.
Yeah, and just put it black and dotted, and anyone, just a different, right? Place it at that high there, right? Use the body of the candle, yeah, right? And then now, based on the low from yesterday, place another one. What do those 2 lines tell you? Or what should they tell you? Huh? So alright, so you went across, which is, so the bottom black line like that gives us the area where this market can potentially find support, right? Which is what it did, right? From previous resistance. So that's a low, right? If we're talking about this market falling, can it go down without closing below that line? It has to, right? And same thing, if the RSI is telling us to fall, but remember the longer term picture, we're seeing bullish, right? If this market is going to be ready to go up, the market has to go up. It has to break that area. Yeah, it has to close above the high. And the reason why I tell you use the body, if the wicks give us an idea, yes, I use the wicks for a range. So you see how you have that little area there between the dotted black line and the blue line?
Yes.
Which is, the dotted black line is the top of the range and the blue line is the bottom of the range. But at some point in time, those candles were full body candles that were up there, right? But it couldn't close up there. So the thing is with confirmation and with price action, what you want is a close above there. That's the entry, because that little area between there is where, like, sometimes when I draw the box to draw resistance or to draw support, that's how you get those areas. Right? So right now the market is doing what it should do. It came down to support, it held, and now it's going up. So now if we're talking about seeing that crown, let's go to the link the 2 black lines and let's go to the smaller time frame. right? So the push up could actually be to the B high. Right. And then if that is the case and that's gonna hold one, that B high has resistance from the B, but also you could see some wicks forming there right by the back of that trend line that you have there, the right there. So that now is another area of potential resistance, right? So if the market gets to that area and gives us a bearish formation, that's a good trade, because everything else is pointing down. That's when we go down now, that's the right tip of our crown. All right, that is resistance, and we could be looking to trade now because we're in the box again. If I had to trade that one, I would be putting a stop above the box that we identified, above the two black lines. Yeah, for the crown, which makes sense because with the crown rules, the stop goes above the A. Because what you'd actually have is draw a fib from that high all the way down to the not a smart fib, draw a regular fib for the crown fib. Right, from there all the way down to the low. Right. So you see that's a 618. If we get that bearish formation there, you're talking about a 618, and then stop above the A, so you stop at about 1.8736 or maybe 40, 1.8740, and then now you could be selling this market all the way down to 1.8168, because the weekly is saying bearish, the daily is saying bearish. When the forward gets up to that zone, it is going to be saying bearish. That 618 would align with, it won't take us out of a bullish move, a bullish trend, but it will get the market down to the 1.618 of that bullish swing. And that is also, if you draw a line there, right, you will see that the 1.618 is also an area of resistance that becomes support. Yep. So you see how the targets kind of align those areas. Sorry? Right. Right. Yeah. So that's where that will get you to the outer trend line that you have at the bottom there as well. It'll get you to that area. Yeah, that's alright. But it'll get you to that area. Right. It'll get you to that area. It'll get you back within a deeper C. So that trade makes sense. It makes sense why that is going up right now, because it's going up to form a C for that swing if that swing holds. So if we get that setup that we're talking about there, we'd have a nice little trade. See, it's gonna go when you extend that one, it's gonna go to that area there. It's gonna go to that outer trend line. With time, that outer trend line plus the support an area from the 1.618, and then now a bullish formation there. That's where you want to buy, because by then the RSIs on the pairs, on the daily, on the 4 hour, maybe even on the weekly, depending on how long this move takes, right, for the pound Aussie to fall, would be a nice little setup. But that all depends on us. For us to be selling, the market needs to stay below 1.86912, which is the highest point in terms of the highest black line. 1.86912, right up there. And then 2, we need an entry. So for the entry, we need the market to go up to that area go up to the 618, you know, to the B, and then give me a bearish. If I get a bearish formation at the B, that's a nice sell trade. Right, and depending on how the market is moving. Now, for me, this one in particular, because of how we have the setups, right? If we get that and we get that bearish formation at that B high, I might leave my target for this one would be all the way down at the 1.81680. I will put an alarm, however, at 1.83886 where your mouse is right now. So when that alarm goes off, I'm gonna watch and see, is the market able to close below that area? If it does, I could stay in the trade. If it doesn't and it gives me a bullish formation at that area, then I will manually exit this position. So in other words, I'm willing to give up, because if you, alright, so measure and see how much it is from that black line up to the B. $232. So depending on the formation I get, I have no problem if I get an entry up there and I'm up 200 and something pips, but I might be going after, in total, that might be what, 2 and 2, 4, if it goes all the way down to the D extension. Right, that's 454. So for me, I'm comfortable if I'm up 200 pips. I'm comfortable letting the market show me what it's gonna do by moving another 50 pips against me. So maybe I take 150, maybe I take, you know, maybe I take 200 in terms of profit, but I'll know, alright, the market is not ready to go down yet. And that's because everything is aligning. When you get the market aligning with everything like that in terms of the bearish movement, is good trades. Right? What about if the market does this? Because everything is still aligning for bearish, right? What about if the market, instead of going up to the B high, is gonna go sideways? Where you think it'll push up to? No, that is the B high, that's the right tip of the crown, right? But if it's gonna break above that, it'll push up to the black line. Yeah, makes sense. So that's my thing with this right now. Based on it, it is bullish right now, but my bias is I want to sell this. So I have two places where I could sell this if it holds. If it does not hold at all and it breaks above that area, the 1.8691, then I'll be looking for a buying opportunity. But again, I'll let it push and then I'll wait for a pullback to then buy. You get me? Because the market could start a consolidation range from there. So draw the consolidation range. Let me see. Let me make sure you're seeing what I'm talking about. Right there. That could very well become the range. So the fib, it might go up just to take out the fib, but again, if it gives me a bearish formation there, that is a previous resistance level that the market held at. So, and as well, a lot of traders will make a mistake where what they will do, they will, when it takes out the B high, they will think it's time to start buying. But the market still has another area which is right there that the market can hold that. Yeah, because again, the market held there for a reason in the first place, right? So if the bears, because that's what happened, if the bears want to retest that, if the bulls, want to retest that, they could go right back up there, retest that, and then and then give us the fall that we're looking at. And that's what tends to happen sometimes. So the trader will take the trade at the B, they'll put a stop right above that U-turn, but the market could very well, so your direction is correct. The direction that we picked for this right now is bearish, right? But the entries was be the problem. So you now have on this two areas where you can potentially enter. We can enter at the B, the red line, or we could enter up at the black line at the top of that channel there to look to sell once the market holds. If the market does not hold, it will close above, and when it closes above, we'd be looking to buy the market up to another area, another target, because that's the D extension that you have labeled there, if I'm not mistaken, at 1.89763 for the bullish. I think that's your daily D. I think you had it labeled as. All right. Isn't that from the daily though? Yeah, I think that might have been the daily. Is it? Yeah, that's the daily D that you had labeled there. So to me, that's again. So in a case like that, to me, I trade to the daily D rather than trading to the 4-hour D that's higher. Yep. Make sense today? All right. So that's it for the session today. What we'll do, because I like to spread it out a little bit, because I want you to do some on your own. So we won't do a session, and we'll probably do same Monday and Tuesday again next week. So you have some time, you could pull up some charts. Any questions in between that, again, just let me know. And I want you to practice. So I want you to go so that when we meet again next week, you'd be able, you know, yes, I was able to see this now. I was able to identify it. Look at these highs and lows here. This is what and all you do, it's simple. You don't have to place an actual trade as yet. You just take a note on the chart with the charting software. You know how simple it is. You literally just leave a note. All right, this is the low here. If the market is going to fall, I need it to break below this low. Close below this low. I needed to close above this high. This is my scenarios, like how we end up with two scenarios. So scenario 1, it goes up, it holds at the B, we get a bearish formation. Scenario 2, it goes up, it holds at the resistance at the top of what could become a consolidation, and then it falls. And scenario 3, it could close above that, and then I'd be looking to buy. So you'd have 3 scenarios waiting, and it's just about being patient and seeing which one sets up. All right. Sorry, I'm not hearing you. Okay. All right. Any questions based on anything we went over today? All right, good. I hope it's adding value as in terms of you being able to understand at least. All right, good. Good. Right, good. So you could use the ebook, and you'd also be able to go over now and practice. So then you have some time, you could practice, and then we'll resume the one-on-one sessions again next week. So over the weekend, we just confirm the times and everything, and we just take it from there. All right, buddy, have a good day.